When creating financial educational content, I get asked one question over and over again. How do I pick IPOs? Is there a magic formula to pick a winning IPO? Is there a checklist to follow before you apply for an IPO? I will share 7 essential filters that will help you evaluate and guide you on whether to apply for an IPO or reject it. The recent surge in IPO obsession has made it even more important to pick IPOs wisely. You may be surprised to know 7 out of the top 10 IPOs by size flopped on the very first day of listing. So this makes it even more important to understand how to pick an IPO. By the way, if I decide to apply for an IPO, I would use this framework as well. I was at a college event in Bangalore recently. I was invited there to talk about risk management. Post my session, I was surrounded by college kids. I was thinking they're going to grill me more on risk management. But to my surprise, most of them were curious to know if they and if I would apply for the upcoming Hyundai IPO. Clearly, most people are interested in applying for an IPO for listing day gains. People want to sell their IPO shares, if at all allotted, on the listing day itself and pocket the listing day gains. So the framework that I'm going to talk about is keeping the listing day gains in perspective. In 2024 alone, nearly 70 companies IPO'd. Me and my colleague at work reviewed all these IPOs and segregated them based on the IPOs that worked and IPOs that flopped. Well, you would be surprised to know out of the 70 companies that IPO'd, only 20% of the companies didn't deliver listing day gains. What does this mean? Well, remember, the last few years up until October 2024, we've been in a bull market. If the market is bullish, then the odds of an IPO to perform well is high. So that is my first filter. I'll always check how the underlying market condition is before I decide to apply for an IPO. Moving ahead, many investors think if the IPO size is large, then that directly translates to a successful IPO. But this need not be true. Historically, a large IPO in excess of 10,000 crores has somehow flopped on the listing day. Take Hyundai for example. It was a 10,000 crore issue, but it fell 7% on the listing day. But of course, there are exceptions to this. For example, Swiggy was a 11,000 crore IPO. So the issue size is not a definitive indicator, and I will not simply apply for an IPO just because the issue size is large. Generally speaking, investors don't really like if the reason for an IPO is offer for sale or OFS. OFS gives a perception that the existing shareholders are using IPO as a reason to exit their shareholding. Alternatively, investors like it when there is a fresh issue of shares. While there is nothing wrong with OFS, remember, IPOs is all about perceptions. 9 out of the top 10 IPOs up until November 2024 had fresh issue of shares, and only 3 had OFS. So the filter that I will use here is that I will reject an IPO and not apply for it if I see OFS as a large component of the issue. Moving ahead, the debt on the company's balance sheet has a role to play in defining whether an IPO will be successful or not. The top 10 IPOs had a median debt to equity ratio of 38%, and the bottom 10 had a median debt to equity ratio of 67%. So do check for the debt to equity ratio of the company filing for an IPO. This information is easily available in their prospectus. The next filter is about the profitability of the company, and this is super important. The return on equity or ROE of the top 10 performers was in excess of 20%, and the PAT margin was at least 11%. So before I decide to apply for an IPO, I will definitely check the ROE and the PAT margins of the company. And on the other hand, if you're wondering if other financial metrics such as price to book, price to earning, or operating margins, would it matter for IPO listing day gains? Well, the answer is no, it doesn't really matter. Moving ahead, let's talk about the next filter, and this one is interesting. There is a perception in people's mind that if a big brand is filing for an IPO, then it is guaranteed to be a successful IPO. Well, this is not true, and this is mostly inconclusive. For example, a big brand like Hyundai did not perform on listing day. And at the same time, unknown names like Vari Energies or J&K India did extremely well. So don't rush to apply for an IPO just because the brand name is big. Moving ahead, let's look at the last filter, the level of subscription in an IPO. If the IPO is subscribed in excess of 60 times, then the probability of such an IPO performing well on listing day is very high. So don't be in a rush to apply for an IPO right on the first day. Wait and watch for the subscription rates. If the subscription rates are favorable, then apply for the IPO maybe on the last day. So these are some of the things that I personally use before I decide to apply for an IPO. If you find merit in this, you can use it too. And before I end this video, let me quickly summarize all the filters once again. A bull market greatly increases the odds of listing day gains. Don't apply for an IPO just because the issue size is large. It does not always work. OFS does not give the comfort to investors. People prefer fresh issue instead. Always look for debt to equity ratio. If the company has debt to equity ratio under 40%, then that's a good sign. Profitability is important. Return on equity or ROE of at least 20%, PAT margin of at least 11 to 12% is favored. Big brand name does not guarantee listing day gains. Oversubscription in excess of 60 times is a good sign. So wait, watch and then decide to apply. I hope you found this useful. If you've observed a certain pattern in a successful IPO, then please do comment below. I'm sure the community will benefit from it. Thank you, and I'll see you in the next video.